So tonight we'll be looking at uh thank you. So tonight we'll be looking at the DXY, looking at BTC, and then I'll be looking at my one and only favorite pair, JPY. I made few recommendations last week, and I'm going to be reviewing that for the week, and then look at the opportunities that we have available in the market for this new week. So let me get on the chart and then we can pick it up. So last week, let me go to the okay. Let me remove all of these charts. Aha, good. So last week, I can't really pinpoint where market was last week. Let me quickly get that. Last week is how many days ago? 1, 2, 3, 4, 5, 6, 7. So this was last week here, like this. 1, 2, 3, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Okay, so this was last week. Last week started here, and then we made a few recommendations that I eventually dropped on the group. You know, so and then I was able to catch few movements. I was able to catch some of the movement from last week, and then and also missed out of a very important movement that really got me pained. Honestly, it really got me pained. It was supposed to be a very easy one. So I know that the last drop before the first um movement to the upside, I took I took good pips from that. I think I took around 165 pips on 3 entries, so average of 65 pips or so. I mean, yes, on 3 or 4 entries, average of 50 to 60 pips. So I had 3 entries, so it was a good movement. And then I missed this particular entry, missed this upward here, and then joined it somewhere here and then. So currently, let's quickly look at what the market is doing currently. So for me, I don't know for you, um, and I don't just look at, like I've always said, just look at what does it for you. Look at the pair that give you, consistent profits that you seems to have mastered, and the money you are looking for, jumping from one pair to the other. If you stick with one pair and master it effectively, you make all of that money in that pair. So you can make almost any money you want to make with just 30 pips. It all depends on leverage leverage and lot size. So, and then you can't just increase your lot size if you don't have confidence, and confidence comes from two things: understanding the market, then understanding the assets you are trading. So first, to understand the market, that this is the market movement, this is structure, this is that. Then you now know the specifics of the pair or asset you are trading, and that cannot come until you master few pairs, and you can, even when you are sleeping, you can say this is what is happening to this particular pair at this moment. I mean, if I'd come across anybody during this weekend and they ask me what's happening on EuroGPY, I can tell you it's on consolidation. It's currently on consolidation, and that's why I didn't even trade on Friday. I was watching for a breakout out of this consolidation, and it never happened. It really never happened. I didn't want to take a trade that would collect all the money I made, during the week, give it back to the market. So this is the consolidation I've been talking about. Look at this. You can see. So for anything to happen on EJ this week that we're entering, we need to get out of this box. And I cannot tell you this is what's going to happen. It's going to break to the upside or break to the downside. Because if you look at it, if you go to the daily candle, you will see that the market has been bullish in the last few days. Only the week made up of 5 days, right? The first 3 days is bullish, you know, were bullish. Then the last 2 days were bearish. But even the bearish, is with low momentum, which is telling us that most likely the bearish this thing is likely just going to be a retracement. So you can see I have different places we have marked, there are huge fair value gaps, institutional references that I'm expecting price to retrace into. So even if the breakout happen on the downside, it's just coming for liquidity, market will still go on the upside. But whichever way, remember, the goal is not to predict the market, is to take money from the market either way the market is going. So let's not stay too much on where the breakout we flow into. Let's see what are the opportunities possible here. So first thing here, if we work with the assumption that market is going to break to the downside, or markets want to continue a bearish momentum, then it's okay for this fair value gap here should be useful. Market should at least pick something here, so which is breaking above here, above the box, or at least above market closing, price closing above this my small line, above 160,187. Then take liquidity around this institutional area. Then we can see market come down, you know fall very well. And then if we are saying that market is ready to continue the upward movement, then either of these fair value gap would really survive, would really help. You can see one is ultimately below that, and then we still have more. Look at this. This is a huge fair value gap. This is another one. This is another. So it will be crazy for us to say price is ready to go to continue the bullish movement without tapping into any of this, without tapping into any of these, huge fair value gap the market has left. So, of course, we know that market will tap into it. When it will happen is what we don't know. So it might not be this immediate movement, it might be another movement, but it has to happen. So now what we are saying is, if we are saying the market is, going to go ahead and continue the movement, the easiest narration is look at this pattern here. This is an name formation for people that trade pattern. Look at this, look at this, look at this, and then another one, and then the fall happened. So pattern or not, the rule of trading this thing is market should at least trace into this breaker block here. Now let me zoom this. Oh, this my chart is getting rough already. But let me try and get this out. There's a breaker block somewhere here. So market should retrace into it, which has happened. Or should we say it that because it happened there as well? So that means market is likely going to go above. So market is going to take something above here, most likely this liquidity here, and then we can now complete the leg, which I even think has happened anyway. Look at this. Market came like this, retraced, and then came back to this area. So, but whichever way, market might still pick few things and then come down into any of this fair value gap, especially the one here or here, because this one is sitting on the 50%. And then we are looking at something around the discount area, is around there, which is around there. So once we have something like this, it will be a very sweet, spot to pick up from. Very sweet spot to pick up from. But those are just scenarios that can play out, and then we hold scenarios in the market with a pinch of what it's just a pinch. What is most important is We allow market to set its head up, we look for opportunity, and we make sure we take money out of it. Basically, that's you know what really matters. So let me get into that for Euro JPY. And then if you look at other JPY, the setup is similar. Either it is um, which other one? No, not JPY. See clean setup. See clean setup. USD JPY makes sense though. See clean setup. Just take a look at it. Some market went all the way, you know, came back into this breaker block, and then what did you see next? Market went, you awesome. See, awesome. Clean setup, very clean one. Sha would not had Euro, I mean USD GBY to my peers like this. See now, see clean setup, still went down again, give you a very good entry. Awesome. Even if you take it here, even if you took the trade here, you are still in good. The market went up, then did how many pips? Over 200 pips. Can you even imagine? So let's check GBP USD, GBP USD, GBP, sorry, GBP JPY rather, JPY. So GBP JPY and then Euro JPY set up almost the same. It's also in consolidation. You can see the consolidation, right? So it's also in consolidation. You want market to break out of this consolidation. You want price out of here. You want price out of here before you take you know, any meaningful trade on this pair. So that's that for the JPYs. Let's go to gold now, right? XAUUSD. Wow. I mean, this pair has given people so much money this week. So much money. Let's take a look at this. I mean, let me see. Let's go to the daily candle. This happened in one day. Look at this. Happened in one day. And then did what? Give a very clear sign. Give a very clear sign. Just take a look at that beautiful structure. If you go down to 15 minutes, you see that give a very clear sign. A low, a high, higher low, higher high, higher low, same high. You can see that's indicating, you know, that something's about to happen. Then higher low, relatively higher low, then higher high again as if he wants to continue. Then came all the way, broke structure here, give us break of structure here. But if you are not convinced, another break of structure here. Even if you are not convinced, give you another break of structure here before anything. Then after that, give you entry. The market, so market still came back to retest this place before falling. Can you just imagine? Or let's even say that was not enough, give you final entry here. You just take a look at it. This is clean break of structure, even on the 1 hour. Isn't that clear? You can see on the 1 hour, clean break of structure. Very clean. So what you just needed to do, wait for market to retrace into, let's look for a gap. The gap is wide, I know. Look at it. Let me go to 5 minutes. Look at it. My market retrace back into that fair value gap, and then see what happened after. Tell me if this isn't beautiful. Just tell me. Look at this. Look at this. I mean, huge money. Massive one. Massive one. So that's for last week. Let's look at what's likely to happen this week. This momentum is strong, even though it's just one day, it happened in one day. So, you don't want to stand in front of a moving train. So we just want to assume it's going to continue. But then before that happen, market will have to break this support here, you know, or we can also eventually have a range. A range can have a trade range where market moves like this and like this for a while. I mean, that range will be so good because it's a wide range to make all the money you want to make in the world. You can see how wide this range is. It's a very wide range. You can make all the money you want to make in the world in this small range. So, like I love to say, we do not what? Do not predict the market. We look at possible scenarios and then we prepare ourselves to take advantage of whichever one that plays out. So that's for gold. Lastly, on today's discussion, let's look at Bitcoin, BTC USD. Let's go to 1 day. Okay, the last time we discussed Bitcoin, I said, I mean, these were the price action. Then I said, this is you will only lose money in this kind of price action, no clear direction. And then till now, there's still no clear direction. So stay off unless you want to lose money. Just stay off this pair for now. Stay off BTC USD for now. No clear direction. It is in a range. So you need to get out. We need it to get out of zero range before anything. Either comes below 94,208 or go above 100 and 153. Mean 100,000 and $153. So we need it to break out of this for it to be attractive. I mean, to be traded, or you just let it go. So tonight, that's all I have for tonight. If you have any other specific pair you want me to look at, please drop it in the chat box. Drop it in the chat box here. So, and if there's none, it's a good place to call it a day. I wish you the best. Remember, no revenge trading. Don't pursue the market. Don't pursue price. You know, determine your setup and let price come into it. And then once you hit one price come into it, you know what to do. You set, you initiate your action, and then you manage your risk appropriately. Thank you so much, guys. We'll see and discuss further in the group, and then we'll talk again next week. Thank you so much for joining. Do have a beautiful and a profitable week ahead.